Short exercise 5-7. We're going to journalize the closing entries for a merchandising company. Rockwall RV Center's accounting records include the following accounts at the end of the year. So we click here to open up our list of accounts plus their balances, and they are in a random order. So we're going to journalize the required closing entries and then determine the ending balance of the capital account. Requirement 1, journalize the required closing entries for Rockwall, record debits, then credits, select an explanation. And then they go on to tell you, start by closing the revenue accounts for the period. Now, they shouldn't have to tell us this. We should remember the 4 steps for closing entries. So let's review those briefly. The acronym is REID. The R stands for revenue. We will close those to income summary. The E stands for expenses. We will close expenses and the contra revenue accounts called sales returns and allowances and sales discounts. So we will close expenses and the contra revenue accounts to income summary. The I stands for income summary. We will close income summary to capital. And the D stands for draws. We will close the draws to the capital account. So the first step, close all revenues. So what I'm going to do here is just going to start up here and try to find my first revenue. So here's my first revenue, sales revenue. I'm going to copy and paste sales revenue. So if I'm closing a revenue account, how do I close a revenue account? So let's look at our accounting grid, our expanded accounting equation. So revenues normally have a balance on the right side. So to close this revenue, I'm going to have to debit the account. So I'm going to debit sales revenue, $710,000. Now let's see if we have any other revenues. Most companies do have more than one revenue account. So we had sales revenue. Now we've got interest revenue, $4,000. And where do we close the revenues to? The temporary account called income summary. So 710 plus 4 is $714,000. And our explanation is to close the revenue accounts. Check our answer. Oops, I screwed up. This should be interest revenue. Hopefully you caught that. Next account, or next transaction, we're going to close expenses and any contra revenue accounts for the closing period. So we need to find, let's first find our expenses. We're going to start up here. So is cost of goods sold an expense? Yes, it is. And let's review the accounting equation. So how do I close expenses? Normally, expenses have a balance on the left side. So to close the expense, I'm going to have to put on the right side the credit. So since debits go first, I'm going to have to close COGS on the second row. It's $368,000. And since we're here, what account do the expenses get closed to? Income summary. So going down our list, I'm going to find the next expense. We got $23,000 for rent expense. What's next after rent expense? We've got, I'm just doing expenses for now. We've got depreciation expense of the building for 16 grand. And that looks like it's all of the expenses. Now, don't forget, we also have to close any contra revenue accounts. Now, this means sales discounts and sales returns allowances. So let's see if I can find either. Here we go. Sales returns and allowances. So this is a temporary account, just showing how much returns and allowances we've had during the period. So that will also be closed with a credit. And we have sales discounts. Right here, we've got sales discounts, $6,000. So I'm done closing our contra revenue accounts and our expenses. So I'm going to add these up to make this easier to read for you. Just put in a comma. It's not necessary, of course. So I'm going to add up these, and I get 453,000. I'll put the comma in there to make it easier for you to read. And don't forget our explanation to close expenses and other temporary accounts that have a debit balance. Okay, and then the third step, remember the REID. The third step is closing income summary to capital. So before we can close income summary, we have to figure out, well, what's the balance of income summary? So here's what I'm going to do. Notice I have income summary here, 714,000. So on a piece of scratch paper, I recommend that you put $714,000 on the right side of the income summary account. So in my case, I can't have scratch paper on the video, so I'm going to put $714,000 in the income summary, and remember that's revenues. So then I'm going to scroll down and find the other place where we have income summary. So we got 453,000 on the left side. Now we have to figure out the balance. So the balance equals the larger side minus the smaller side. So 714,000 minus 453,000 gives us 261,000. So this is the balance of income summary. And now we need to close it. And we close it by putting the balance on by putting the same amount on the other side. So this closing entry for income summary is going to be 261,000 on the left side of income summary. So again, we're closing income summary. 261,000. That means we also have to credit the other account. And what other account do we, or what account do we close income summary to? We close it to the capital account. By the way, which way, if we are crediting capital, is it going up or down? You should always double check this step because a lot of students screw it up. So here's capital. If we are crediting, if we're putting it on the right side, then we are increasing capital. Now, does that make sense for this problem? What would increase capital when we're doing the closing process? Net income. So do we have net income? Revenues are 714, expenses are 453. Revenues are greater than expenses, therefore we must have net income. So we are doing this problem correctly. Don't forget your explanation to close income summary. And the last one, we're going to close withdrawals. So where's my withdrawals? Here are the withdrawals. We got 55,000. So I can copy and paste that. So how do we close draws? Withdrawals normally have a balance on the left side. Therefore, to close draws, it's going to be on the right side. So my credit account is draws. And where do we close draws to? Capital. So capital should be going down since draws decrease capital. So let's just double check. If we are debiting capital, is it going down? Yes, it's going down. So we've done this step correctly. So don't forget your explanation to close withdrawals. Check our answer. And then we've got one more step. It says, or it asks, what's the balance of capital at December 31st? So to remember, we might have had a balance of capital before this period. So let's look to see if we have a capital account. So we've got 178,400 in capital before this whole closing process started. So if we have a balance of capital, that's on the plus side. So that is on the right side of the T account. So we started with 178,400. So then we find that we have increased capital, 261,000. So I take that previous balance, add 261,000, and then the last time we affected capital, we decreased it by 55,000. So I will subtract 55,000. So our balance is 384,400. And that's it.